Welcome to Our Stock Trades. In this video, we're going to be doing a raw one-on-one format. I really like these, so please comment down below if you have any questions. We're going to analyze the Opendoor stock, ticker symbol OPEN. I'm going to show you how real analysis is done. So if you're part of the Mastering Stock Market course, Our Stock Alerts members, please follow along because we're going to show you step by step on how to use this information. And we're going to slowly keep adding and adding and adding so we can learn, all right? So just before we start, Opendoor CEO Eric graduated from the University of Arizona. I graduated there from 3 degrees. In fact, I'm working on 3 other more as and I'm currently in medical school, aspiring, fingers crossed, to go into neurosurgery. That's my dream. And what I want to do is I want to bring him in, using our wildcat culture, bear down culture. I want him to bring him in to do an interview regarding his company, Opendoor, because I really see some potential. So we are seeing some fundamental shifts within the company that may relay in the stock price going up. At the end of the video, we're also going to do an intrinsic value calculation. So without further ado, let's get started. So what I like to first do is I like to open up the help menu, which is just /help. What that does is it pulls us up. I hit price targets, and I see all my commands for price. What I want to do is I want to see what are the what are analysts thinking of this stock? So it's currently trading, when they posted this, it was trading at 483. They think the price target is 850. Open here, price target when posted $7.81. This was back on March. They said a price target of $15. So I normally don't use this when I do my analysis, but since this is the first time talking about it on YouTube, I think it was a great way to start. We can also look at the price target consensus. So we're going to go ahead and look at that. Like, what are other people thinking about this? So we can say we have a high of 15, a low of 8.5, and an average or a consensus of 11.75 with a median of $11.75. So already, if you look at the stock right now, I don't know where it's trading at, 520. Yeah, you can only double your money based off what analysts think. So that's pretty impressive. But these are just analysts. I like to analyze my own companies, and I'm going to show you how to do that from an educational standpoint. So what we're going to be doing is we want to pull up the quarterly statements for Open. The annual, since this company just did a SPAC, there's not a lot of information. So I like quarterly because it gives you more. So we're going to take the net income. We're going to download this bad boy here, okay? And we could just call it net income Open, because the file name is going to be same because we're going to download another one. And we're going to download cash Q for quarterly, and we're going to download that boy with a DL. And we're going to hit that, and we're going to download the statement of cash flows. And these are all financial information. We want to understand the books for Opendoor. So we're going to open these up here. And we're going to zoom in on here. So this is the income statement. I don't want too much information from here, just 2 things. So first things first, we're going to read this from left to right because that's how people read, at least, English. So we're going to go left and right. And what we're going to want to do is we want to take the revenue and we're going to put this here. We also want to take, in terms of gross profit, we can see that for some reason there's a dip here. This may be TTM. We're not too sure, but you can see here my apologies. The numbers have been increasing. They recently dipped for the gross profit ratio, which is a little concerning, but the stock market and the market as a whole has been, especially real estate, has been cracking. So that's something also we're going to be looking at as well. But for this analysis, to not confuse folks, we're going to omit the gross profit ratio. We're going to go ahead and take a look at the EPS diluted. Okay. And we're going to put this more towards the bottom. Okay. Now that we got what we needed from the net income statement, we're just going to toss this that way. We're going to focus on the statement of cash flows. So let's go ahead and zoom in on here. Now, again, this is from 2022 to 2020, so we got to just sort it out. We go to data, sort, option, sort left to right. We hit OK. There it is. It's sorted. So we're going to be taking some really cool stuff from here. We're going to take the net income. You can also get it from the income statement, but statement of cash flows here. Oops, sorry. Let's go ahead and take this bad boy there so that we're going Income, net cash from operations is not too far deviating away from the actual free cash flow. So we'll just take the free cash flow because for people that don't understand, it's usually this subtracted from this to essentially get you this. If you don't believe me, we could just illustrate it right now. That's already negative, so we can just add it then. So we get that number. You see how that's accurate? So just to show you the mathematical here. So again, this is an educational platform. So there's that. And now what I want to do is I want to take the date. So we're going to put the dates here. So I usually like to put in the dates here and here. Again, these are all in quarterly. Let's bold them out, make them look sexy and appetizing. Okay. And then what I like to do is let's kind of clean it up because I want my little... I want you guys to have a very nice experience here. And want to clean up the data here. Free cash flow. Okay. Great. All right. So what we're going to be doing is we're going to graph this. Okay. But first, we're going to switch it to currency. So we have the numbers. This doesn't need to be switched. So we're going to go ahead and graph. Clean it up a little bit. Opendoor. Oops. Put a little apostrophe there, whatever that is. We're going to go ahead and put 35 for the size. And this should be good. Now we're also going to be going ahead and graphing the EPS. We're going to add some trend lines and we're going to do some technicals of the fundamentals, okay? Which is actually really important. So we're going to push this up. Take this. Okay. And we're going to add some trend lines now. These trend lines are really important, guys. Okay, so we're going to, this is free cash flow. This is net income and the revenue here. So just to make it easy for you guys to read, because sometimes it may be small, we can push this up. We can push this back down to 12. 10. All right. So we're going to add a trend line here. And usually what I like to do is I like to make my trend line red. It's almost like, think of it as a simple moving average in a way, right? And I like to make it 3.5. So please follow along, my Mastering Stock Market students and also our Stock Alerts members. So we're going to add the trend line here. We're going to hit the red and we're going to go in and do 3.5. Okay. So again, every time the numbers are above, it's positive momentum. It's positive. It's bullish. Anytime they're below this trend line, it's negative. Okay. So you can see we're starting to get above it on both the EPS and the free cash flow. We're going to make this inference very soon, very shortly. So now what I want to do is I want to get the stock price. So please follow along, okay? I want you to enter this code. You're going to hit equal. You're going to hit stock history, okay? I want you to go ahead and put open with the apostrophe, open, okay? We're going to hit comma. You want to hit that date, which is right there, March 31st of 2020. So you're going to say quotations, March 31st, 2020, close, comma. You're going to hit today. You want to look at today's value, and you want to close parentheses. And once that goes, it's going to show you the data. See that? It shows you the history of the data. So I'm going to zoom out. Actually, let's just kind of scroll down like this. And we're going to graph this as well. Okay. And we can just hit stock price. Okay. We can make it look cool like that. I personally like to keep it consistent. I'm going to go ahead and zoom out here. Whoopsies daisies. I'm going to zoom out here so we can push this back up. There's a lot of information, like 2-3 years of stock information here. All right. Oops. We're almost at the top. There it is. So what we're going to be doing now, let's zoom in. What I want to do is I want to kind of put this here and stretch it out to make it look, concurrent with the dates, line up the dates. Now what you can do is you can add a trend line here and you can analyze this trend line. And most people don't do this. I don't understand why, but this is a sophisticated way of graphing this, because as soon as we were bouncing off of this trend line, I guess you can call this trend line analysis. Once we bounced, we were bullish, but then all of a sudden, once we crashed and we had a confirmation of a crash, we've been down ever since. So you can wait until we get back up to this trend line, but there's some data that we need to look at, because we do see some things I'm going to point out to you right now that makes this essentially going to predict that if this stock is going to move up. So we're going to go ahead and let's remove that trend line for now, and let's focus on what we have built here. So let's zoom out a little bit here. And what I want you to focus on is the red trend line here, okay? The free cash flow back when the stock was in its early days was positive. The revenue was positive, and also the net income was slightly positive. Let's look at it here. The net income was not slightly, but it was near positivity. But the free cash flow and the revenue were up, and they were above the trend line. Likewise, the EPS was above the trend line as well. And if you map those out, the stock price was doing extremely well. Unfortunately, once the EPS went below that trend line, also the free cash flow, we started seeing the stock price go down. Now you can argue and say, well, the EPS was above the trend line here. Why didn't the stock price go up? Well, it kind of did, but you want to use, again, multiple data, confluences of data to ascend to your analysis. So with the free cash flow going up and the revenue going up and now the EPS going up, and guess what? The net income now has actually just became positive, which is why I'm making this video. There's a reason why I'm making this video, because there's a change now. This thing just flipped up. And once this market dynamic changes, the fundamentals of this business is becoming even more sounding. You understand what I'm saying here? That means that this price is about to jump if the fundamentals continue. This is the linear for the free cash flow. I hope that makes sense. If that doesn't make sense, please rewind the video and watch it as many times as you need. All right. So what we're going to be doing now is we're going to take the average free cash flow, what I would do for the free cash flow, instead of doing it this way, or better yet, let me think. Yeah. So let's go back here to Brain Machine and let's do the cash, but let's do the annual. Okay. And let's type in open. So this is more the annual. So let's change this to currency. So these are all negative here. One was positive. So let's switch back here. So how do we do this? We can switch over. On average, we can analyze the revenue here. So you see the type of thinking that goes on with analyzing a company. So because there's a lot of negatives here, it's very difficult. So we still have to, I would say we estimate the free cash flow. So we can do type 5%, which is probably going to be a low ball. This is a number, not a currency. And what we can do is we can take the 5% and multiply it with the revenue, and that should give us the expected free cash flow. So you can see this is a software company, so 5% is a low ball. That's $257 million. When in reality, they have their free cash flow positive right now, and they're at 1.5. So I would say with my estimation, that's a little too much of a low ball. If I was doing this, I would divide it by 2. So I would basically take this divided by 2. So I would want around 770. So we can change this into a percentage, and we can say, let's just mess around with it until we get 770. A little bit more, 15, about 15%. So I think 15% is a pretty good revenue estimation. Okay. So because of this now, we're going to go in, look at the numbers that we got from net income, and we're going to go to the annual analysis DL. Now, for people that do not want to do all this analysis, my recommendation is just invest in an index fund. Now, this way helps you outperform the market and beat the market, but it is time intensive, but it is very liberating to be in control of your own financial destiny. And it's fun I think this is fun. So we're going to push this here, keep both. And what I want to do is I want to look at the revenues for the annual. So let me zoom in here, because remember, we're looking at quarterly. Now that I know it's a 15% annual here, we can sort out the data and clean it up. So let's sort it out. So let's put this here. Let's change this into a currency so it's easy for us to read. So on average, we can take this number, which is, let's see here, about 1.8 million here, 4 billion, 2.5 billion, and 8 billion. So what I'm going to do is I'm going to push this to the side here. And now we've taken this data. Now we're going to calculate our price target. So we're going to go to our intrinsic value software. We just updated it, so I can't wait to show you how it looks like. It looks pretty badass. It's blacked out dark mode, baby. And now we're going to go ahead and remember those numbers I talked about. So in 2018, they had 1,838. Again, these numbers are in millions, so that's $1.8 billion. That's in revenue, okay? So we look at 2019, 2020, and 2021. So let me just put the numbers here. Okay, and we said we're going to do 15%. So all we have to do now is take this multiplied by 15%. If they sustain this free cash flow. That's why I did half. So now, and I'm doing also when they didn't have a lot of money. So it's great. So we go to 2018. Let's drop them in here. All right. So now that we did that, now look at this. I want you to look at the year now. If you say you want 2 years out, you see how it projects over to 2024? We're going to send a satellite image literally 10 years into the future, all the way up to 2032. Okay, that's how powerful this thing is, okay? So now what we're going to be doing now is we're going to look at the revenue growth from Opendoor from 2018. Again, we can just drop those numbers in. 1,838. In 2021, they had 8,021. Now, they're growing at 63%. Now, personally, for me, that's a little too much. What we can do is we can look at the most recent revenue growth. We can look at Brain Machine, but since I already have this open, we can look at the most recent, which is 589. We're not using that. So I'm gonna be a little conservative. I mean, this thing could track 63%, but I'm gonna take half of that. I'm gonna just cut that in half because I want to make money. Rule number 1 is make money in the stock market. Rule number 2 is to not, Warren Buffett said, rule number 1 is don't lose money. Rule number 2, follow essentially rule number 1. And essentially that translates into your ass making money. Okay. So all we have to do now is we need to get the shares outstanding. So my recommendation is you go up here, you type in the shares, you do the float, and you hit open. Oh, I put OPEM. And then there it is. And that is around 624 million shares. So you put 624. So the stock price, again, these numbers are absurd. I don't think they're going to be growing 63% for the next 10 years. That's no way. Even if you have the 63%, that's still probably a little too bullish, but we're going to go ahead and see what the price is. 31, we're going to put 31.5. Okay. So these numbers are a little bit more reasonable. Okay. So this is essentially, we can now look at the stock price finally, right? It's 527. So you can put this 527 to calculate the percent adds upside. We can hit open for the ticker. Now, normally I'd like to already do this work for you and then basically present it on YouTube. But for the next couple of videos, I'm going to be essentially breaking it down like this so people that are part of our group can learn how, again, I'm going to teach you how to fish. Okay, we're not going to spoon feed you. I want you to managing your own freaking life, okay? I want you strong, all right? So what you can do here is you can give a 1-year projection, and you can see anywhere between $6 to $16.97. Now, you can see a lot of these small caps and mid caps are in near recession level. So you see how we just projected out 1 year? So this is the stock price. We're currently trading near the recession level as indicated within the stock price. We could go anywhere from 6 to 16. Now, if you look at the past 6 months, let's see. So yeah, right around it, 12 to 5. So we can see we've been trading anywhere between the base to the recession level, okay? So we can hit 2 years, we can hit 2024, we can see where that's trading at, right? So if we could do 5 years out, this could be the price. Now, personally, for me, I would let's see something on average, because we're reverting back to the mean when it comes to real estate. Real estate's a tough one. So what we can do is we can hit Zillow and look at Zillow stock. That's ZG, okay? But we're not going to look at Zillow when the freaking Federal Reserve made interest rates low. We're going to look at Zillow historically. We're going to look at the annual for Zillow's revenue. So on average, we got 97, 31, 27%, 23%. So they surprisingly, they've been growing pretty damn good. Let's look at the income, the take-home money. So a little bit more unpredictable here. Definitely, they've probably been losing a lot of money on operational expenses there for sure. So I would say we could take their lowest, which is 23.84%. I just want to down-regulate this. So let's do 23% growth. So as soon as we do 23% growth and we hit 10 years into the future, we can go anywhere between $15 to $16. I think the $60 price target is going to get hit. I think 23% year over year is actually pretty damn decent for this company. If you want to be a little bit extra bullish, you can hit 10%. But even though, 20 bucks for sure for the stock. I mean, definitely. But I think from my standpoint of how I want to evaluate the company, again, I'm very conservative. I would say anywhere between 31 to 60, I would say, $30 to $35 would be an appropriate value for the stock. Now, I don't know what it was trading at in terms of the highs it was, but we did graph it here. So we have had a high of $35. So that's why it's so important to, you guys learn how to do these intrinsic value calculations, because it does kind of help you ascertain when's a good target point to sell. Okay. So I hope that was helpful. This was a mega analysis video. I mean, guys, if you stayed this long, pat yourself on the back. Like, you are going to do great things. For you to have this much capacity to learn something like this, it's pretty impressive. You want to get better. You want to self-improve. You want to change your life. This is how it's done. This is how to build generational wealth. Not buying a meme stock and hoping and praying and getting on your knees that 3AC Capital is going to give back some money for Voyager, or perhaps all this other crap that's been happening. Maybe they can restructure and you might get some, digital coins, right? Some crap, you know what I mean? But anywho, I'm happy that you guys stayed this far. And if you want to learn how to do analysis like this, we do offer a program that's been featured on Bloomberg, MarketWatch, NASDAQ, Yahoo Finance, and many reputable sites because our product works. As always, it is a privilege and honor to serve you, and I will see you on the next one.